Okay, my dear students, now we are going to discuss about the amendments in this particular video. With respect to the amendments, so in this particular video, the amendments that what we are going to discuss is amendments that happened between November 1st, 2022 up to 30th April 2023. What are the amendments that will be there? All those amendments are applicable for your November 2023 with respect to our CA Inter, and whereas with respect to CMA Inter, December 2023 will be applicable. Okay. And in this particular book, two parts were given. Part 1 deals with the amendments that are applicable for November 2023 with respect to CA Inter, and with respect to CMA Inter, December 2023. And part 2 of this particular booklet will be applicable to the students who has actually studying the masterminds material. With respect to them, what I can say is 48th edition. Okay. The students who had with them the 48th edition of our material, then those people are required to read the part 2 amendments also. The students who are reading 49th edition, okay, are not required to read part 2 amendments. That is the first thing you need to remember. And even though part 2 is not required for the students who are following the 49th edition of our masterminds material, but still it is advisable to read the amendments at once, because they are given all at once now. It will be easy for you to read those amendments if it all are gathered together at once. So for them also, they are also the latest amendments now. Not all the amendments are tested in the May 2023 attempts now, as well as with respect to June CMA Inter. So that's why there is a possibility that the left of those amendments can be asked in this particular attempt also. So that's why you need to keep focus on part 2 amendments also, even though they are covered in your material at various chapters. That is the thing you need to remember. Okay. And now the first amendment is with respect to supply chapter. So applicability of GST on the incentive paid by the Ministry of Electronics and Information Technology to acquiring banks under incentive scheme for the promotion of rupee debit cards and low value BHIM UPA transactions. Okay. So generally, in order to encourage the transactions of this rupee cards, the government may have given some incentives to the acquiring banks. In those cases, whatever the incentives that are given by the government here, that means the Ministry of Electronics and Information Technology, definitely it will be in the form of subsidy. Therefore, it is not taxable. Already you know that subsidy from government is excludable. Subsidy from any person other than government includable. So not that much important from the examination point of view. Okay. Now this is important one from the examination point of view. So this no climb bonus is actually the important one from the examination point of view also. What is this no climb bonus generally? What is this no climb bonus? As per general practice that was prevailing in the insurance sector, the insurance company will deduct no claim bonus. The insurance company will deduct no claim bonus from the gross insurance premium amount when there is no claim is made by the insured person during the previous insurance period. Okay. That means while paying the premium for the next period, the insurance person is required to pay lesser premium. Okay. That means in the previous year, you may have taken a insurance policy, health insurance, let's say for example. In the previous year, you did not make any claim with respect to the insurance. Therefore, when you want to renew the insurance policy now, being no claim was there in the previous year, some extra deduction will be given in the form of no claim bonus from the insurance premium that is needed to be paid in this particular year. Okay. The question is here whether the deduction on the account of new claim bonus allowed by the insurance company from the insurance premium that is payable by the insured can be considered as a consideration for the supply provided by the insured to the insurance company. Agreeing to an obligation to refrain from an act of lodging insurance claim during the previous year is a question here, ma. Okay, that is the thing we need to remember here. So, what is the point here, ma? As per 7, subsection 1A, which deals with that means right along with Schedule 2 provides that agreeing to an obligation to refrain from an act or tolerance or not to do something shall be treated as supply of service. So that means technically, in order to be covered by 7 subsection 1A, read with Schedule 2, a contractual obligation should have, first one, refrain from an act, second one, or tolerance, or to do something. If any of these 3 activities are there, then further there must be some consideration must flow in return from the other party, then it will be treated as supply of service. Okay. The question is here whether no claim bonus can be considered as a consideration for the supply provided by the insured person to the insurance company by way of not claiming the insurance claim. Here there is no such thing now practically. That means the insured person means practically we will call him the customer. So generally the customer procures the insurance policy generally to indemnify himself from any loss or injury which may or may not happen. If at all it happens as per the terms of the policy, definitely he will claim the insurance. If that particular thing is not happened, that means any loss or injury does not happen, in those cases, definitely he will not claim anything. That means technically it is not a contractual obligation. That means there is no contractual obligation on the customer not to claim the insurance during the period which is covered by the policy. Okay, therefore, no claim bonus cannot be considered as a consideration for any supply provided by the insured to the insurance company. That is the point you need to remember. And second question is here, whether that amount can be claimed as a discount or not is another question mark. That means whether no claim bonus provided by the insurance company to the insured can be considered as admissible discount for the purpose of determination of value of supply of the insurance company provided by insurance company to the insured. That means whether that amount can be considered as a discount or not is a question mark. With respect to the second case, as per 15 subsection 3, while computing the value of supply. Any discount which is given before or at the time of supply will be excludable if at all that particular discount has been recorded in the books of accounts of the person. Okay. Definitely, based on this, the insurance company will make the disclosure of the fact of the availability of the discount in the form of no claim bonus on the insurance document itself, and also it will provide the no claim bonus in the invoice that is issued to the customer. Therefore, it is clarified that no claim bonus is a permissible deduction as per section 15 subsection 3 while computing the value of supply. Okay, that is the answer. GST shall be leviable on the actual insurance premium payable by the policyholder after deduction of no claim bonus on the invoice. That means, what is the point, ma? That particular no claim bonus can be claimed as a discount as per section 15 subsection 3. So what is the summary of this particular point, ma, here? So we are just discussed about the taxability of no claim bonus. Taxability of no claim bonus that is offered by the insurance company. Okay. So this no claim bonus is allowed to the customer for not making any insurance claim during the policy term. In simple words. Okay. No claim bonus is allowed to the customer for not making any insurance claim during the policy term. Okay. In that case, at the time of renewal of the policy next year, this no claim bonus will be adjusted against the premium that is needed to be paid. Okay. In that case, there are two issues that are there with respect to this new claim bonus. Whether new claim bonus can be considered as consideration for the supply from the policy holder to the insurance company. What is the answer for that we discussed? Policy holder takes the policy to indemnify himself from any loss or injury and is under no contractual obligation that not to claim the insurance even though that particular thing happens. Okay. Therefore, this no claim bonus is not a consideration and there is no need to pay any GST on that. Second part, whether this NCB, that is no claim bonus, can be considered as a discount while computing the value of supply. Yes, as per section 15 subsection 3, definitely this is a pre-disclosure amount in the form of no claim bonus will be there in the policy documents, as well as this no claim bonus will be specified in the invoice by the insurance company itself. Therefore, it is allowed as a discount from the transaction value as per 15 subsection 3. That is the thing you need to remember with respect to this clarification. The next point is levy and collection of GST is the next one you need to see. So the next point is here, the scope of the RCM is extended to the courts and tribunals also. That means simply the services that are provided by central government, state government, union territories or local authorities to any business entity, definitely it is covered under RCM. In the same way, renting of immovable property by the central, state or UT or local authority to any registered person, it is also covered under RCM. Okay. Now, by inserting a clarification, now whatever the reverse charge entries that are applicable to the government now shall be applicable to courts and tribunals also. That is what the clarification has done here. Okay, that means whatever the reverse charge entries that are applicable to the government shall also be applicable to the court also. Okay, that means what is the point here, ma? Services by generally the services by court or tribunal which is established under any law for the time being in force, they are covered under 7 subsection 2 read with schedule 3. That means they are neither the supply of the goods nor the supply of service. Okay, but however, besides these judicial functions, besides these judicial functions, if the courts or tribunals provides any commercial activities like renting, etc., which are not covered under Schedule 3 as per 7 subsection 2, definitely they will qualify as a supply. Okay. In those cases, those activities are taxable and definitely what is applicable, ma? RCM will be applicable. So let's say for example, Supreme Court provides chambers to the various advocates on rental basis for which a rent is charged. Okay. Although here the Supreme Court is the supplier, as per the notification, as per the circular, it is renting of these services now taxable and they are covered under RCM. Recipient is liable to pay the GST. In the same way, let's say for example, so AP High Court provided a space to the telecom company for the installation of their cell phone tower for which it charges from these companies. Okay. In this case, telecom companies is liable to pay the GST under reverse charge mechanism on the renting services that are provided by the AP High Court. Okay. Previously, courts and tribunals are completely outside the scope, but now the judicial functions are kept outside. Rest of the things which are taxable, just like in the case of government, will also be applicable here also. That is the point we need to remember. Okay. So the next point is with respect to exemptions chapter. So with respect to this exemptions chapter, exemption relating to immovable property, the provision is here. Services by way of renting of residential dwelling for the use as a residence, except where the residential dwelling is rented to a registered person. So, what is the existing provision? The provision previously that was there is services by way of renting of residential house for residential purpose, except where the residential house is rented to a registered person, it is exempt. Okay. And in addition to that, the renting of residential house supplied by any person to a registered person, it is covered under RCM. These are the two existing points now. Okay. But what is the amendment now? What is the amendment now, ma? The registered person, the updated exemption entry as actually which is read as under, okay, renting of residential house to a registered person. The point was modified like this, ma. The registered person is a proprietor and rents the residential house in his personal capacity for the use as his own residence, and such renting is on his own account and not that of proprietorship concern. Okay, what is the point my here? I mean, simply what we can say is, let's take the example. So let's take the example of this renting of residential houses there. Okay, this residential house can be given on rent, okay, in two ways. That means two purposes. One is for personal use, that is residential purpose, and second one is for commercial purpose. Okay, the property can be given on rental basis in two ways. One, for personal use. If with respect to personal use, if the recipient, we need to see who is the recipient. If the recipient is a registered person, if the recipient is a unregistered person, is the thing we need to see. If the recipient is a registered person, then automatically we need to see, this is a new point we need to see. If the recipient is a registered person and this recipient is the sole proprietor who is using the property for his personal use, okay, is the sole proprietor who is using the property for his own residence in the personal capacity. In that case, it is exempt. That is the point we just completed. Okay. Is the point here? The recipient is the sole proprietor and used that particular building in his personal capacity, then it is exempted. Definitely there is no need to pay GST. This is the extension of the amendment just now. Okay. In other cases, that means he is not the proprietor or is the company or something like that, then definitely it is taxable. And it is taxable under RCA. Okay, ma. If the recipient is a registered person and the recipient is the sole proprietor and that particular building was used for personal purpose, that means used in personal capacity, it is exempt. And if at all it is others, definitely taxable under RCM. Sir, if the recipient is unregistered person, then what is the position, sir? It is always exempt. Okay. Sir, what about the commercial purpose, sir? If the recipient is unregistered person or registered person, in both cases it is taxable, ma. But if the recipient is a registered person, it is taxable under RCM. If at all the recipient is an unregistered person, it is taxable under FCA. That is the difference you need to remember. Okay. Okay, ma. If the renting of the residential house for personal use, if the registered person, the recipient can be registered or unregistered. If the recipient is a registered one, but he is the sole proprietor who is using the property for his own residence in the personal capacity, it is exempt. That is the new amendment. And with respect to other cases, it is taxable under RCA. If the recipient is unregistered person, then it is exempt. Second point, if at all the residential house is used for commercial purpose, then the recipient can be registered or unregistered. If the recipient is an unregistered person, then taxable under FCM. If the recipient is a registered person, then it is taxable under RCM. That is the point you need to remember with respect to this amendment. Okay. The second point is there, with respect to access to a road or a bridge on the payment of toll charges. What is the existing provision with respect to this point? What is the exemption that is there before the amendment? Services by way of access to a road or a bridge on the payment of toll charges is exempt. That point is also there now. Similarly, services by way of access to a road or a bridge on the payment of annuity is also exempt. Previously, this point is also there. Okay. Services by way of access to a road or a bridge on the payment of annuity is also exempt previously. But now this particular annuity is now taxable, where the consideration is annuity, GST shall be leviable. That means the exemption was withdrawn. What is the point here, ma'am? What is the logic behind this particular amendment? What can be the reason? Okay. Generally, under annuity model of this highways construction, the government pays certain sum of money to the company who is constructing that particular road or highway, okay, at the beginning of the period, okay, and thereafter the remaining amount will be paid in form of annuities during the operational period of highways, okay. Here the construction company is not allowed to recover any toll fee from the public who is using that highway, okay, if at all the government is paying the construction company any annuity. But the government, the CBIC circular clarified that previously any payments that are made by the government for the construction of the road is not exempt. But as per the court decision that happened later on, I think it happened in Karnataka, annuity paid to the construction company is basically instead of the toll gate charges. Hence, they are covered under exemption notification. Therefore, on the annuity also, we are not liable to pay any GST. This is the court judgment, ma. Okay, that's why in order to make it taxable, now whatever the exemption entry that is there in relation to this annuity was withdrawn, now definitely it is taxable. That is the point we need to remember. Clarification on the applicability of GST on the accommodation services supplied by the airport mess and other similar messes to its personnel. Okay. Generally here this mess is a designated area where the military officers who can socialize there, who can eat in some cases. Okay. In India, we have the Air Force mess, Army mess, Navy mess, Parliamentary and Police Forces mess, generally which will provide the services to their personnel or officers. And whether the question is here, whether the services that are provided by these mess are subject to GST or whether they are exempted is the doubt that arises. In order to answer this particular question, the clarification was issued. Okay. Generally, there was one exemption entry in the exemption notification provides that services provided by central government, state government, UT or local authority to any person other than business entity is exempt. Okay. Except the postal department services and some other services will also be there like transportation of the goods or passengers, something like that. Okay, whether that particular exemption will be applicable to these mess related activities or not is the question. Okay, now the accommodation services, sometimes they will also provide that, provided by this Air Force mess and other similar messes like Army mess, already we discussed, like Navy mess, Parliamentary and Police Force mess to its officers, okay, are covered by the exemption entry because these services are qualified to be considered as the services that are provided by the government. Okay. So it implies that if the mess facility is maintained by any private body and not by central or state government itself, then the exemption would not be applicable. If at all this mess is operated by the government itself, in those cases it is exempted. Okay. If at all this mess facility is maintained by any private body, that means if at all it is outsourced to any other person and it is not run by the central government or state government itself, In those cases, exemption would not be available to that. If at all it is run by the government, then only it is exempted. That is the clarification that was given. And the fourth one is education and training sector. The issue is here, various boards like National Testing Agency has been set up by central governments or state governments for the purpose of conducting the entrance exams like NEET, JEE, NET, NET, etc. Okay. The question is here whether these services are taxable or exempt. Okay. Then what is the exemption that is there with respect to the education service? Generally, three types of educational institutions are covered under this exemption notification. One is preschool and higher secondary school, and courses that are recognized by Indian law. Third one, approved vocational training centers. Okay. The question is here, these national testing agencies can be covered under the entry of these educational institutions is a question mark. So, now it is clarified that any board or authority that is set up by the central government or state government, including national testing agency, for the conduct of any entrance examination to these educational institutions shall be treated as educational institution. Okay. For the purpose of providing the services by way of conduct of examinations to the students. Therefore, whatever the fee that is charged by these national testing agencies for the conduct of entrance exam is exempt, there is no need to pay any GST. That is the point we need to remember. Okay. And fifth one is Naam Ke Vaste. Free coaching services provided by the coaching institutions and NGOs under the central scheme of scholarships for students with disabilities, where the total expenditure is borne by the government to the coaching institutes by way of grant is exempt. Don't be misunderstood that this is 100%. Here total expenditure means 75% or more. Here not to be taken as 100% of the expenditure. If the total expenditure 75% or more expenditure is borne by the government, then definitely those free coaching services are also exempted. There is no need to pay any GST. Okay. Next one is with respect to input tax credit. So what is this first point? Reversal of IDC in case of non-payment of consideration. This is a very interesting one. It is not an amendment actually. It was a mistake that was done by the department previously was now rectified. That is the only thing. What is the point is there is whenever IDC was claimed by the recipient and if the payment is not made within the prescribed period of 180 days from the date of invoice, whatever the IDC that was claimed previously, along with interest at the rate of 18% per annum, is needed to be reversed. Okay. Previously, for May attempt, the amendment is at that time. At that time, the amendment is even though you had made the partial payment, okay, even the part payment of consideration has been paid within 180 days from the invoice date, but still entire amount of IDC is needed to be reversed. What is the amendment that is there in May? I am not talking about this November attempt amendment. The amendment that was there in May 2023 is that even if the part payment of consideration along with taxes has been made within 180 days from the date of invoice, still the entire amount of IDC is needed to be reversed. It is illogical. When you paid part of the amount, only part of the amount that is not paid, in that particular proportion only IDC is needed to be reversed. But the department was little bit too harsh. In order to soften the provision, Now it was there just like which was before May 2023. That means now what is the position now? It was made retrospectively. That means if you are made part payment of consideration and only part payment was unpaid, then only proportionate IDC shall be reversed and not the entire amount of ITC. That is the first point. If the part payment was done, then only the proportionate amount of IDC shall be reversed and not the entire amount of IDC that is needed to be reversed. Okay, ma. That means, say for example, previously you just paid the total amount needed to be paid is 100 rupees, ma. IDC was 10 rupees. Okay. Now you made the payment of 70 rupees. In that case, 7 rupees is allowed. Only 3 rupees is needed to be reversed along with the interest. Okay, that is the point. But in May 2023, the department was too harsh that even though you made 70 rupees, you paid 70 rupees in the total 100 rupees, but still total 10 rupees is actually needed to be reversed. But now only the proportionate amount. Here 70% was paid, 30% was not paid. Therefore, in the 10 rupees, 30% means 3 rupees. That 3 rupees is needed to be reversed now. That is more logical. This section 41 as well as its rule number 37 YEMA. In simple terms, what we can say is by clubbing this point number 2 and point number 3, reversal of IDC in case of non-payment of GST liability by the supplier. That is the summary here. Okay. So, what is this section 41 generally? Generally, the self-assessed IDC shall be credited to the electronic ledger. Okay. Self-assessed IDC shall be credited to the electronic ledger. That means whatever the GST, the recipient declare in his GST or 3B. Okay, then definitely it can be claimed as self-assessed IDC and that amount will be credited to the electronic credit ledger. Okay. Then, if the recipient avail the IDC, which was there in the above, shall be reversed in case of non-payment of tax by the supplier. Okay. If at all the supplier fails to make the payment to the government, definitely whatever the IDC that was taken by the recipient, it is needed to be reversed. So later on when the supplier makes the payment to the government, then it can be reavailed. Okay. For that, what is the prescribed time period is not mentioned in the section ma. It was mentioned in the rule number 37A. Okay. Which return is needed to be filed and all these things is there. Okay. The question is here, what is the need of this particular amendment ma? If you observe section 16 subsection 2, recipient can avail the IDC on the inward supplies or purchases only when the tax has been paid by the supplier. Okay, the payment can be made either to the cash or by utilizing the IDC, that is different story. But the amount is needed to be paid by the supplier is one of the conditions that is prescribed under 16 subsection 2. Okay. And in the same way, there is also another point to claim the IDC if at all you are able to remember rule number 36.4. What does rule number 36.4 says? Any recipient can claim the IDC of only those inward supplies which are reflected in his GSTR 2B of that particular month. Okay. That means the details or the details of the invoice or debit notes of the supplies which are uploaded by the supplier in his GSTR 1, those things are auto-populated in GSTR 2B of the recipient. Those items are required. Those inward supplies that are reflected in GSTR 2B, on them the recipient can claim the IDC. But what happened is many times supplier used to reflect the details of his outward supplies in the GSTR1. Okay, thereby those things are auto-populated in recipient GSTR2B. If the supplier uploads the data in his GSTR1, it will be auto-populated in recipient's account GSTR2B. Thereby recipient is able to claim the ITC. That thing is fine. But what the suppliers are doing is here, even though they are reflecting the details of his outward supplies in GSTR1, but they were not reflected by him in his GSTR3B. Thereby, the tax payment was never made by the supplier in respect of those supplies. But still the recipient is claiming the ITC because those are reflected in GSTR1. If those things are reflected in GSTR1, they will be auto-populated in recipient account in GSTR2B. Got the point? In that case, what is the position, ma? Definitely, in that case, what is the position? The recipient is able to claim the ITC, but in the same way, the supplier is not paying the output tax, thereby bringing revenue loss to the department. So that's why the reversal of ITC under rule number 37A was created. So section 41 read with rule number 37A provides that where the recipient has claimed the ITC in his GSTR3B, where the ITC has been claimed by the recipient, see, where the ITC was availed by the registered person, furnished by the supplier in his GSTR1, but corresponding GSTR3B is not furnished by the supplier till September 30th of next financial year, ITC availed shall be reversed by the registered person while filing the GSTR3B on or before November 30th. Okay. If at all the amount is not reversed on or before November 30th, such amount is needed to be paid along with interest at the rate of 18% per annum. Okay. What is the point, ma? Where recipient has claimed the ITC in his GSTR3B. Recipient has claimed the ITC in his GSTR3B, but the supplier has not filed the GSTR3B. That means simply the supplier did not make payment to the supplier did not make payment. Simply the recipient has claimed the ITC in his GSTR3B by claiming it as inward supplies. Those inward supplies are not reported by the supplier as outward supplies. Okay. Till September 30th of next financial year. Till September 30th of next financial year. Then whatever the ITC that was claimed by the recipient, it is needed to be reversed on or before November 30th of next financial year. Okay. This reversal needs to be done by the recipient on or before November 30th of the next financial year. If the reversal is not done within the prescribed time limit of November 30th, in that case, definitely interest shall be payable by the recipient, okay, at the rate of 18% per annum. That is the thing we need to remember. Okay. Sir, what about the cases where the supplier subsequently reported those supplies in his GSTR3B? That means after the above reversal is made by the recipient, subsequently the supplier pays the amount. That means supplier furnishes his GSTR3B along with those outward supplies. Recipient is allowed to re-avail this amount of ITC in his GSTR3B of any period thereafter. That is the point. Okay, ma? So what is the point here? What is the summary of this point now? Let's say so section 41 along with rule number 37A. Let us assume that there is one supplier and there is recipient. Supplier supplies the goods, let's say for example on 2nd July 2022. The goods value is, let us assume that 1 lakh and rate of GST 18%, that is 18,000. Okay. Supplier reported them in his GSTR1. If the supplier reports those things in GSTR1 in the month of July, okay, but these supplies are not reported in GSTR 3B. Okay. But whereas those things are reported in GSTR 1, therefore they will reflect in GSTR 2B of the recipient. And this 18,000 will be claimed as ITC by the recipient in the month of July. In the month of July 2022 itself. Okay. Now the point is here. If at all this particular supply of this 1 lakh is not reported by the supplier in its GSTR 3B up to 30th September 2023, next financial year, September 30th also, these supplies are not notified, not reported by the supplier. In that case, whatever the ITC that was previously taken by the recipient, it is needed to be reversed by the recipient. In our example, this 18,000 is needed to be reversed in the GSTR 3B by the recipient. If at all, he reverses it on or before, that means November 30th, 2023, then no interest is payable. Okay. If at all, the amount is not reversed on or before November 30th, that means after 30th November 2023, ITC reversed. In that case, interest is needed to be paid at the rate of 18% per annum. Interest is also needed to be paid at the rate of 18% per annum. Later on, let's say for example, in the month of December 2023, okay, the supplier uploaded that particular information in his GSTR 3B. Is it possible to re-avail the ITC? Yes, the recipient, whatever the ITC that was previously reversed, definitely what is the position? This 18,000 which was earlier reversed may be re-availed by the recipient, and the time limitation that was prescribed under 16 subsection 4 will not be applicable here. At any time he can take the ITC. That is the point we need to remember with respect to this amendment. Okay. So there is no amendment in time and value of supply majorly. The next point is here, there is a amendment with respect to registration procedure. Even though here the entire registration process was given, there was only a minor deviation in the procedure, but we have given the entire topic here. So what is the registration procedure? What we know, What is the registration procedure we know? Generally, what is the form number with respect to GST registration? REG01. In REG01, two parts will be there, Part A and Part B. Generally, what are the details we will submit in Part A? Applicant shall declare his PAN, mobile number, email ID, state. In his Part A of the application form REG01, PAN will be validated based on CBDT database. Mobile number and email ID are validated based on the OTP. Once it was done, a TRN will be generated. Based on TRN, part B will be filed. Okay, this is the thing already we know. But now there is a change in this particular part A mechanism. This is amendment now. Remaining procedure remains the same. Remaining all are same, no changes in here. Only this point that there is amendment. This is the only amendment. So this is not required. This is the amendment part. Rest of the things remains the same. What is the amendment now, ma? As per the amendment, applicant is required to provide only his PAN and state. He is not required to submit the email address, mobile phone. Okay. That means the applicant is required to provide only his PAN number and the state where he wants to do the business. That means the requirement of providing the email address and mobile number is no longer there. Okay. And sir, what then, how is the OTPs will be generated? Generally, the PAN will be declared by the applicant in his part A. As usual, it will be validated from the CBDT database and it shall separately verify through separate OTPs that are sent to the mobile number and email ID that is linked to the PAN. That is the point you need to remember. Okay. In order to prevent the people to misutilize the PAN of the other persons, this amendment is much more needed, ma, and it is most welcome step in order to prevent the frauds. Okay. Simply now, what is the procedure, ma? There is no requirement to provide mobile number and email ID of the applicant while filling part A of GST REC 01. PAN declared by the applicant shall be verified by the website by sending OTPs on the email address and the mobile number which are linked to that particular PAN. Thereby part A filling is over. Now the rest of the proceedings are similar to which was there in previous procedure scenario. Okay. This part B based on the TRN part B will be generated. Now the application will be forwarded to proper officer. Okay, ma'am. And the procedure remains the same. And here another amendment is there is with respect to the Aadhaar authentication process. That means a new system of biometric based Aadhaar authentication was introduced. In case, if at all it is a risky, department feels that is a risky applicant, if at all is identified as a risky applicant by the common portal, in that case, for them, there is a new system of what we call biometric based Aadhaar authentication was introduced. Okay. Now, what is the existing provision with respect to this Aadhaar authentication? That means generally every applicant, if at all is not specified under section 25(6)(d), that means like foreign individuals, something like that, some exceptions are there now, for which there is no need to link the Aadhaar, except those people, every applicant, while filling the part B of the GST REC 01 has to complete Aadhaar authentication within next 15 days. And which the Aadhaar authentication gets successful, then the date when this Aadhaar authentication was done, the date when this Aadhaar is linked to the registration application shall be considered as the date of filing of GST REC 01. Already we know this point. This is existing provision. Okay. And how they will link the Aadhaar, ma? How the Aadhaar authentication will be done at present? That means Aadhaar authentication will be done by sending a OTP to the mobile number which is linked to the Aadhaar. By entering the mobile number, it is deemed that Aadhaar is linked with the GST registration process. Okay. If other authentication is successful, what is the time limit to issue the RCMA registration certificate? Within 7 working days. Okay. Either he need to issue the registration certificate, or if at all application is incomplete, he need to issue the show cause notice. And there is no mandatory requirement of physical verification if at all the other authentication gets successfully done. Okay. If at all the proper officer feels that it is necessary, then physical verification will be done, but it is not mandatory. But whenever physical operation is there, in that case, this 7 days will be replaced by the 30 days. Already this is existing provision. Already we know this. Now, what is the amendment that is there in this particular process? Already I told you that if at all he is a risky applicant that is identified by the common portal based on the data analysis and risk parameters. Okay, high risk applicants. In that case, okay, there is a separate procedure for other authentication for him. Okay, for him, in case of these risky applicants, based on the data analysis and risk parameters which is identified the common portal, GST or EZ01 shall be deemed to be filed only after completion of this particular process, which is there in point number 2. Okay, what is that particular process you need to undergo? First point is here, biometric Aadhaar authentication must be there. Biometric Aadhaar authentication should be done, and taking photograph of the applicant should be done. If it all is the artificial person, that means not an individual, then photograph of Karta, managing partner, or any other authorized representative will be taken. And the original copy of the documents which are uploaded in GST REZ01 will be verified at any one of the notification facilities that are there by the commissioner, notified by the commissioner. Okay. And along with that, mandatory physical verification will also be there, ma. Okay, ma, this is a process what you should remember, ma. So, what is the summary of this particular amendment, ma? A new rule was inserted to provide that in case of risky applicants, who have been identified by the GST common portal based on the data analysis and risk parameters, the following additional steps shall be done mandatorily before the registration can be granted to them. What is the procedure? First one, biometric Aadhaar authentication shall be done. Second one, taking the photograph of the applicant. Third one, verification of the original copy of the documents. Fourth one, physical verification of business premises. These are the 4 points mandatorily should be done in order to get the registration certificate. First one, biometric Aadhaar authentication. Second one, taking the photograph of the applicant. Third one, verification of original copy of the documents. Fourth one, physical verification of place of business. If these 4 was needed to be done in order to give the registration certificate. What is the time limit for doing all these things, ma? 30 days. If the proper officer has not done these things, within 30 working days. In that case, it is deemed to be registered. Currently, this is important thing. Currently, these provisions have been made effective in the state of Gujarat on pilot test basis. That means on test basis. If at all it works out, it will be applicable in other states also. Okay, ma? Currently, these provisions are made effective only in the state of Gujarat. So, the applicants applying in any state or UT other than Gujarat, the same procedure that is there shall continue to apply. So, that's why from the examination point of view, they are not that much important. What I can remember, what I can say, at least. Okay. So, what are the risk factors based on which the common portal identifies generally? Anything what we can say? Like suspicious GO code addresses, age of the bondholder is of some 90 years, 80 years, but still you want to do the business, like age of the bondholder. The product what he wants to deal is a risky good. Okay, already if the applicant is registered in some other state, then definitely is GSTR1, GSTR3B filing behavior. There was the cases of IDC misutilization. There was the cases of non-payment of tax in the other state. These are the risk factors based on which the common portal identifies the risky applicants. For them, you need to follow the 4 points. What are the 4 points you need to follow, ma? First one, biometric based Aadhaar, taking photo, verification of original copy and physical verification. But this one is applicable now only in Gujarat. Rest of the states, what is the procedure you have discussed, only that particular point will be applicable. Okay, ma, there is the amendment in tax invoice, debit note and credit notes here. With respect to this particular amendment, invoice come bill of supply, already you know that. A registered person is required to issue the tax invoice in respect of the taxable supplies he made. That means in relation to taxable supplies, what is the document you need to issue, ma? Tax invoice. If it all is making any exempted supplies, what is the document you need to issue, ma? Bill of supply. Sir, if at all we are making both taxable supplies as well as exempted supplies to a unregistered person, in that case, there is no need to issue a separate document for both these supplies. A single invoice come, bill of supply can be issued. That is the thing we discussed. Okay. What is the thing, ma? What is the provision? If at all you are making the taxable supplies, tax invoice is needed to be issued. If at all you are making the exempted supplies, you need to issue the bill of supply. You need to issue the bill of supply. Okay. But if at all you are making both taxable supplies as well as exempted supplies to a unregistered person, that means if at all it is a B2C supply, in that case, instead of issuing two separate documents, a single invoice cum bill of supply can be issued. That is the point already we know. But now what is the amendment? Now the amendment is that whatever the document you issues, that is a single invoice cum bill of supply, it shall contain the particulars that are specified in rule number 46, generally rule number 46 and rule number 54 generally deals with respect to the particulars that should be there in the taxable supply, that means should be there in tax invoice. Rule number 46 and rule number 54 will specify the particulars that should be there in the tax invoice, like supplier GST number, name, address, serial number, date of issue, description, tax rate, tax amount, like that. Those particulars will be there under rule number 46. And in the same way, rule number 49 deals with the particulars that should be there in bill of supply. All those details should be there in that particular invoice cum bill of supply. The amendment is that previously a single document can be issued that is named as invoice cum bill of supply. But now law specifies that what should be the particulars that should be there in a single invoice cum bill of supply. What are the particulars that should be there in the invoice cum bill of supply, ma'am? With respect to the invoice, what are the particulars that should be there? The particulars that are specified in rule number 46 and rule number 54. And with respect to bill of supply, rule number 49. What are the particulars that should be there? As per those rules, should be there in this single document, invoice cum bill of supply also. That is the thing we need to remember. Okay. The next point is clarification on the applicability of invoicing with respect to an entity. Generally, what is the rule, ma? To whom this invoicing is applicable, ma? Any registered person whose aggregate turnover starting from 17-18 onwards exceeds 10 crores is required to issue the invoice. But there are few exceptions to this invoicing concept, ma. That means even though their aggregate turnover is more than 10 crores, but still they are not required to issue the invoice. What are the cases that are covered, ma'am? Special academic zone units, banks, financial institutions, NBFCs, insurance companies, GTA, passenger transportation business, multiplex movie theaters, government departments, local authority. These people are not required to issue the invoice even though their aggregate turnover is more than 10 crores. Okay, but the question is here. Now the CBIC comes up with the clarification that said exemption from the generation of invoice is for the entity as a whole and is not restricted by the nature of supply being made by the said entity. That means the exemption from mandatory requirement of invoice is available for the entire entity as a whole and not restricted by the nature of supply what it makes. Okay, let's take the example of the bank. The bank is making the banking service. Okay, sometimes what the bank will has to do along with the banking services, sale of the bullion or sale of the goods kept as collateral will also be done by the bank along with the banking services. The question arises here, to banking services only invoicing is not applicable, but also to the activities which are done by the bank like sale of bullion, sale of the goods which are there as collateral, for them also invoicing is not applicable is a question. In order to clarify that particular thing, what the clarification says is this particular exemption from the mandatory requirement of e-invoice is available to the entire organization but not restricted to any particular service. Therefore, whether the bank is doing the banking business or the bank is doing the sale of the bullion, in both cases, it is not required to issue the invoice. That is the point we need to remember. See, this is the point you need to remember. Okay, ma? And another point is there with respect to here is with respect to e-way bill. Generally, there is exemption with respect to e-way bill, ma. If the consignment value is more than 50,000, e-way bill is required. But even though the consignment is more than 50,000, if at all it is a transportation of jewelry, precious metals, precious stones, semi-precious stones, in that case, there is no requirement to issue the e-way bill even though the value is more than 50,000. Okay. But now, from the jewelry, what is actual excluded? Ma, imitation jewelry is excluded. Therefore, if the imitation jewelry consignment value is more than 50,000, definitely what is required? Ma, e-way bill is required. Okay. The main logic of excluding this jewelry, precious metals, precious stones is that from the requirement of e-way bill was they are of high value items. Therefore, there is a possibility that if their transportation details are provided in e-way bill, there might be some security issues. But however, with respect to this imitation jewelry, basically which is called as rolled gold or some artificial jewelry, it's quite less in value. Therefore, security concerns will not be there. That's why the government removed this particular thing from the exemptions list. Therefore, with respect to the imitation jewelry, if the value is more than 50,000 rupees, definitely what is needed, ma? Yes, e-way bill is needed. Okay. So this is Namke Vastam in the payment of tax. If at all there is a failure on the part of the bank, generally, if at all there is a successful transaction that happens, then CAN, Challan identification number will be generated, ma. Okay, and this will be communicated to the concerned party who made the payment. But sometimes there is a failure of the bank to communicate the details of CAN to the concerned party who pays the amount. If at all it is in conformity with the details in Challan that is generated in form number PMD06, which is matching with the e-scroll of the Reserve Bank of India, then also the electronic cash ledger balance can be updated. So for the academic purpose, it is having the zero importance, ma. Okay, if at all the bank is unable to provide the simply the payment confirmation to you, it can be gathered from the RBI e-scroll also. That one is more than sufficient. Now, with respect to the returns, there is a change in the late fee, ma. So, with respect to section 47, what is 47 deals with, ma? Late fee payable by any registered person who files the GST returns after the due date. Okay. Separate late fees was there for GSTR1, GSTR3B, GSTR4 and GSTR9. And in the same way, there is a point with respect to annual return. With respect to annual return, what is the position, ma? With respect to the annual return, previously 100 rupees per day or 0.25% of the turnover. But now it was amended, ma. With respect to annual return, GSTR 9. If the registered person aggregate turnover is less than or equal to 5 crores in the relevant financial year, then 50 rupees per day or 0.04% of turnover, whichever is lower, will be levied as a late fee. And in the same way, if the aggregate turnover is more than 5 crores but less than or equal to 20 crores in the preceding financial year, then 100 rupees per day, that means 50 rupees CGST and 50 rupees SGST, or 0.04% of turnover, whichever is lower. If the person turnover is more than 20 crores, then per day 200, that means CGST 100 and SGST 100, or 0.50 of the turnover, whichever is lower. Okay, ma'am. So there is one another new rule that was there under rule in the name rule number 88C. A new rule was created. Whenever there is a difference in the liability that already told you in the GSTR1 and GSTR3B, there is a difference in the liability reported in GSTR1, that is statement of outward supplies, and GSTR3B, based on which you will pay the GST. Accordingly, the tax liability in GSTR1 is more than the tax liability in GSTR3B, then that difference will be intimated to the concerned registered person. Then you need to pay the differential tax along with the interest, or if at all there is sufficient cost is there from the point of view, definitely you can make the explanation. Okay, unless you deposit the amount or furnishes the reply, you are unable to file GSTR1 for the subsequent tax period. That means GSTR1 will be suspended. That means GSTR1 will be blocked. There is the difference between the amount that is specified in GSTR1 and GSTR3B. That means GSTR1 amount is more than GSTR3B amount, and the difference is communicated to the registered person. In that case, you need to pay that amount along with the interest, or should give the explanation. Okay, in that case, definitely there is no issue. If at all neither the amount is paid nor the reply was given, then your GSTR1 generation will be blocked. That is the point you need to remember. Okay, ma. That is the point above also there. See, registered person has not furnished with GSTR3B, then GSTR1 can be blocked. This point already you know. Previous month GSTR3B was not filed. Then also the next month GSTR1 can be blocked, and this is the amendment. The registered person to whom the intimation is given under 88C neither deposited the amount nor given the reply explaining the reasons. In that case, his GSTR1 can be blocked by the department. This is the point you need to remember. Okay, ma'am. And this is part 1 with respect to the new amendments, ma'am. And part 2, already you know that these amendments are there in May 2023 attempt, and these amendments are incorporated in 49th edition, but still it is advisable to read the part 2 amendments also. Okay, in the total amendments, some amendments are more important. I will tell you which are the most important amendments that can be asked in the exam. So from my point of view, in this particular total video, the most important amendments are from my point of view only. I'm not saying that these things are only things that will be asked in the exam. So my opinion can be right or wrong sometimes. But as far as my knowledge is concerned, these are the important things in this amendments video. One is clarification regarding the no climb bonus. Clarification regarding the no climb bonus. And second one is with respect to exemptions and reverse charge. We discussed about renting of residential house to a registered person, but in his personal capacity it is exempt. Okay, those points are there now. That amendment is important from the examination point of view. And in ITC, proportionate ITC is needed to be taken. The first one. That means only the proportional ITC is needed to be reversed, so that one is important. And second one is this one, that means rule 37A. Like if the amount is, if the details are not declared by the supplier till the completion of September 30th of the next financial year, then the recipient need to reverse the ITC along with interest. If it all on or after November 30th, before November 30th, no interest is needed to be paid. We discussed now. That point can be asked in the exam. And with respect to annual return late fee. With respect to annual return late fee. These things can be asked in the exam from the November 2023 attempt, in my opinion. So please keep focus on those amendments. That means you need to revise them at least 3 to 4 times. What I told you that are important. Okay. So, and you can read the part 2 also. In part 2 also, my knowledge is concerned. Definitely, there is one thing I thought that will be asked in the previous exam only, previous exam, but it was not happened at that time. That is with respect to section 50. These things are not required at present. Okay, you can ignore it. And already I told you this. Section 50 will be there in this part 2. This one. This one, that means wrong utilization of ITC concept is there, Nama. This one can be asked in this particular exam. There is a possibility in May 2023 amendments list. This particular example, you keep focus, either theory or the problematic one can be asked in this particular area as far as my knowledge is concerned. Okay. So, God bless you all. I hope this video will be useful to all of you, and hope definitely what are the things we discussed in this particular video will also come here in exams and you will write well. Bye to all.